All right, what's up, y'all? Welcome back. Class number three. Class number three. Class number three. Have we got everybody in here? All right, let me just start sharing my screen. Screen two. Oh, that's a bad. That's a bad. All right, bet. All right, welcome everybody. Welcome everybody. Welcome everybody. You know me. You know who I am. Pattern, you know. We're going over class three right now. I got for y'all. So today we're gonna be getting started with breaking down the strategy, what I used to trade, what multiple people in this Discord used to trade, mainly me and Adrian. We use this strategy. What's it called? Every single day. Every single day, follow the same strategy to the T. Sometimes there's some what ifs. It just depends how market moves. But you guys will learn that as we go through the course. So if you guys want to go to notes and resources, I should have dropped in there. I would say in class notes, you're going to see in the class chat, you're going to see EFP trades class one. You're going to open that document. So I have it right here. It's gonna open up right now. I'm just waiting for this shit to open. Uh, I'll bring it up right here on the screen in front of you so we can have it right here. But basically, this is what I'm talking about. You're gonna see these notes I made for y'all. Basically, just kind of basics. But we're gonna use this in today's class. So the very first class that I did, we set up. I asked y'all what is trading, and then I explained to y'all different ways to trade, how I trade, and then this is the strategy right here. So we're gonna start with the first two steps. So we're gonna explain to you guys what these first two steps look like in the market, what they mean in the market, how they work, how we use them, why we use them. So now let's get right to it. So we're gonna have this Word document right here on the side just so y'all can see it while I'm also talking. So I also keep notes up. So breaking down strategy. So strategy, the first thing you need for a strategy is going to be a liquidity sweep. That's going to be the first thing you do. Liquidity sweep, liquidity grab, whatever it is. That's what you're gonna be looking for in the market. So we look at 4 hour and 1 hour. That is our main bias when we come look for when we're looking for liquidity. So I'm gonna delete this right here. It's never got deleted. Make the market look a little more clean. All right. So basically, right here, what do you guys see? These red lines. These are my market liquidity zones. Are what I'm looking at. What I'm looking to target. Now, some of these can get old, so you have to go back and move them. But I keep them in the same area. So these are all liquidity zones that have been hit. If they're crossed over, they've been hit already, or that they haven't been hit. Like this one up here, this one down here, you got taken today. These are lows that got taken out today. So what is liquidity? So liquidity, like I explained in the very first class, it's a basically buildup of orders. It's where orders, there's resting orders in the market. So you're gonna have liquidity usually at the top of highs and below lows. That's where you're gonna find liquidity. Now, why do we use this liquidity? This liquidity gives the big market players. I'm talking ETFs, hedge fund, these big people. All the people that are throwing billions of dollars into the market every single day, millions and billions. That's what they're using to get into the orders and get out of their orders. So the people that when you see the candlestick moving on your screen, these are the people that are moving the market. These big people, these big whales. So our strategy kind of consists of trading the exact same way they trade. We enter when they enter, and we get out when they get out. So when do these people get out? They get out when they hit these liquidity pools, whether it's on the 1 minute, 5 minute, and all these time frames are going to be different liquidity pools. Now, obviously, we're day trading, so we're going to use the 1 hour and the 4 hour. That is our starting biases, and also session highs and session lows. So I have right here. And then we could add another one which I didn't explain. And the previous one is going to be data highs and data lows. See if it lets me type in this one. All right, so let me type in here. So you guys will make a copy on yours. Just turn this document to a copy, and I would say add data highs and data lows. How do I spell it? Like this right here. Data highs and data lows. Now you're probably wondering what is that? Data highs and data lows are going to be this right here. So whatever these news events create in the market, whatever highs or lows these create, that's what data highs and data lows are. And they could also be paired. A data high could be a session high, and a data low could be a session low. So that could just be pairing as well. It could be, oh yeah, just sweep this 1 hour data low and session low. So it could be a 1 hour low. It could be like this right here, for example. This could have been a 1 hour low, which is also a session low, which was also a data low. That just gives it all the more confluence for you to look for a setup within that trade because it's sweeping multiple key areas in the market and like a point of interest basically. So when you see this pop up on your screen, you see it take one of these highs or one of these lows. It's not just immediately get in. No, what this tells us is, hey, market has the potential now to give us an entry point. That is all this tells us right here. That's, you don't worry about nothing else. When you see a 1 hour, 4 hour get taken, all right, so 4 hour right here, you have a 1 hour right here. When you see that get taken, all you see is, hey, market is giving us the potential to enter. It doesn't mean, oh, I just saw a fucking session high get taken, let's fucking enter short. That's not what it means. So we're gonna come right here. For example, trading today. Let's put it as if we were trading New York, right? Put it right here, right before New York starts, right? This is the market we're looking at right before New York starts. So I'm on replay mode. This is today. What am I seeing right here? So this is me looking at the market literally 20 minutes before market open. What am I looking at right now? What is this market telling me right now? So what did we sweep? We just swept this high right here. What does this high also equal as? Oh shit, that's a 1 hour high right here, all the way at the very top right here. It's a 1 hour high. What is this also? Is it a 4 hour high? It is also going to be this 4 hour candle wick right here, but we're gonna go off this 1 hour high right here because that's what it is. So 1 hour high, does that fall under strategy? Boom, checklist one done. Now why do we go for these points? These are bigger points as well. As you can see, this was also a fill of this fair value gap, which we're going to get into way deeper once you guys understand the strategy and once you guys are starting to paper trade and back test a strategy. That is when we're going to explain different ways to enter, or hey, maybe you don't need a liquidity sweep, maybe you need this and that, but you guys aren't there yet. So I'm not going to just overload you guys with information on different ways to enter, because then you guys are going to start entering. Oh, but it came back up to this fair value gap. Why didn't it go back down? Because it's not always going to happen. So, all right. So liquidity sweep is the first thing we look for in a market. So what do we get? We got a pre-market sweep. So what does that tell us? That goes down to our second strategy. So not only did the sweep happen pre-market, not only did we get this London high get taken, we also have this 1 hour right here, this big 1 hour that had not been taken before. So why hasn't it been taken before? Because the market has not gotten back to that price point. Once market goes back to that price point, it's when it's going back to fill these orders up here. Now you're probably confused by what I mean by fill orders. Let's say, for example, you go up, you see a guy selling bananas on the street for $1, right? So you're walking up to the guy, you're about to hand them your dollar to get a banana, right? And then some person runs up and hands him $5. Now those bananas are worth $5 instead of $1. So you were sitting there waiting, and you were about to give him the money, right? You were basically handing it to him in his hand to buy the banana, and some guy ran right in front of you and gave the guy $5, shooting the price of those bananas up to $5. Now you don't have $5, you have $4. You're missing $4 now to buy the banana. That's basically what the market does when it creates liquidity. So people were down, right? We had this price mark here of 25,514, right? People were buying orders up here, and then boom, market dump, market dump, market dumped. That means people were willing to enter, right? People were buying at this price, and then the market started dumping. So all these hedge fund owners that were waiting to get in up here, or up here, or up here, right? Or up here, that's resting areas now. These are resting orders now. There's millions of dollars of orders waiting up here, waiting to get put into the market, but they didn't, right? Because the price point didn't go back there, or maybe price came down and they were waiting for it to go back up here. They had the order set in the market. Like they say, hey, if price passes this point, it's gonna automatically put me in an order. Price never went back there, so guess what? Now they throw down, Those orders stay in the market. Those orders stay in the market, until price goes back to that range. Once price enters that range again, guess what? Boom, all those orders into the market. Now we get a surge down. That is where we look for our entries, because those are where these banks are filling their orders at. And you can see it down here as well. Market came down. Why did it come all the way down? If we probably scroll back a few days, we have resting orders right here. We have actually a fat imbalance right here. This surge up right here, fat imbalance. This is probably this is probably like a cool little 1 hour fair value gap that was right here. So what is a fair value gap? Like I explained in class one, fair value gap is an imbalance of orders in the market, meaning that there's also liquidity in fair value gaps. So obviously market came down, boom, filled all those orders in, consolidated, and then came right back up. So the market has to chase liquidity for it to be a stable market. Market can't just always go up, 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 because then it's just gonna leave people behind. It's gonna come back down. It's not gonna, no, it's not fucking gonna come down, right? It's not gonna come down. It's not gonna fucking take out fucking lows from fucking April. I mean, it can. Don't get me wrong, but that's going to happen over a continuation of days and weeks. So if market does that, obviously market is going pretty bad because we're going up right now. We're going up. That means thousands. That means millions and billions of dollars are getting taken out the market. But that's besides the point. So come back to this, right? Boom, we get a liquidity sweep. If and it says right here in the strategy, 5 minute. Our next step is a 5 minute confirmation confluence, right? So what does that tell us? It's going to be a breaker structure, an inverse fair value gap, or 79% extension, or SMT divergence. SMT divergence only works in indexes, preferably NASDAQ and ES. So SMT divergence, like I explained in class one, is basically going to be it's going to be one index is going to lead over the other. So one index is going to show the true move and the other one's going to be lagging behind. You want to take the trade on the index that's already showing the true move and not the lagging move. So if Nasdaq or NQ creates a higher high, right, and ES creates a lower high or a lower low, you already know that ES is the leading index. ES is showing that yeah, we sweep the liquidity, but now market wants to go down. It broke structure to the downside, it wants to go down. While NQ created a higher high, ES is going to be the leading index and vice versa. That's so you can use that as a confluence as well. I don't use it day to day. Every trader is different. For example, TGR, he loves using SMT divergence. He uses that shit. That's his bread and butter. I don't use that. So my bread and butter is usually going to be a breaker structure or inverse fair value gap. Very rarely 79% extension. I would say that's like a it's like a black sheep type of situation where like if you have no other confluence and you're highly confident this move is going to go down, check if there's 79% extension. If you don't have a 79% candle extension, then that move probably isn't going to go that direction. So boom. Those are our 5 minute confirmation. So once we see this 1 hour, right? You're watching this on the 1 hour, usually when I'm market open, right? You see this, you see it come up. That's a bit. It's not showing. It's not showing, but I would say around we were like right here. It's not showing us. It doesn't want to show us exactly how it was a few moments ago. Let me see if I can get it to show us what happened here earlier. Okay, let me see. Start new. Let's get this 9 up. Let's do 8:55. See if it shows us that 1 hour candle beforehand. All right, exactly. This is what you're seeing, right? Basically, at market open, this is exactly what you're seeing. Boom, we just looked this high. This 1 hour got filled. Not all the way, but we got filled, and we're tapping into this fair value gap. This fair value gap also works as a support to this one to as a support. So if you have a 1 hour high, right, and it goes back into that, and it goes back, and this fair value gap hasn't been like retested, basically, like this would be a retest, right? So it came down, came back in, it respected it, and kept going down. If market instead did this and then came back down, this would be a retest. So then this move would probably come down, right? You'll do this thing up, and instead of coming down, it would probably come down for a little bit and then go right to that fair value gap. Why? Because it's already been tested. Or it'll come down again, but it's not going to come down as much. But that's for future classes. But when it's a fair value gap like this, right? When it's a fair value gap like this, it's a support. Like look what happened up here. Yeah, we got tested it. Yeah, it came into it, dipped again. Like came up to it, retest, came back down. Boom, retest, retest came down. So this can support your decision. If hey, I think market is going to come down, we hop on the 1 hour. That's the first thing we do. That's the first thing you're looking for. You saw this 1 hour high get swept. All right, good to go. The second you see this 1 hour high get swept, you're hopping on the 5 minute. So boom, that is a pre-market sweep, right? That is a pre-market. That means before 9:30, before New York Open, we had a sweep of liquidity, and you don't see another liquidity pool for another 100 ticks, another few hundred ticks, right? So the next big liquidity pool is going to be up here. That's what we're looking for. You can mark out this 5 minute right here, maybe just mark it, but you're most likely gonna wanna. This is gonna be the one you're taking the trade off of, not the 5 minute. You just keep the 5 minute here just to keep it there, just so you know that hey, it took this high. Because you might, let's say we took longs, this 5 minute right here might show rejection. So if you start seeing your trade come down, you're like, why is it coming down all of a sudden? I don't see no liquidity on the 1 hour. The liquidity is all the way at the top. You hop in on 5 minute, you're like, oh, okay, just took a 5 minute higher, probably gonna see some resistance before it keeps going up. Stuff like that. So boom, you have market, right? You have market right here, you get a pre-market sweep, right? You come look at the strategy where you're trading, you're like, hey, all right, we just got a liquidity sweep, but it's pre-market. So it's right here. Number one happens before market open, 9:30 Eastern time. Wait for a 5 minute manipulation or liquidity sweep. All right, cool. So now we know what to do. Now we're just gonna let this play out. Basically, we're waiting. I'm waiting until 9:30. Let me mark this. Let me mark this right here for y'all. What is 9:30? 9:30 is right here. 9:30 is gonna be when it hits that white line. So it should be his next candle right after this one. You're also gonna see boom. 9:30. What do we have right here? Boom. Right. We had this giant move right here. So market opened. You're like, oh shit, market's dumping. Okay. If market starts dumping right away, you don't do anything. You wait. You wait till you get your 5 minute manipulation. Still hasn't happened, right? Not only, guess what? Not only did we take London lows, we just took Asia lows as well, right? What's the next low? If it keeps going down, New York PM lows right here, right? Bunched up with New York AM lows as well, right? So you wait, boom, next candle pops up. Oh shit, what do we have right here? A lot of people are gonna think market's going to reverse up. We just swept London lows and Asia lows, right? We just came pretty much down and we just took all these lows. Market obviously is going to keep going up, right? I almost got taken out on this move today. I almost went long. I put it on a trade for long, re-looked at my chart and I said, what am I doing? I got out the trade right away. I didn't care if I was like what, $9 in negative when I got out. I was like, I don't give a fuck. I'm getting out. I read this completely wrong. And so this happens. It just happens. So once I saw that, I was like, I didn't even let it retest equilibrium. So this right here is what I explained to you on class one was equilibrium. I marked out this low, this high right here. This right here is your 5 minute manipulation. Now, why does this work as well? Because right here, you have equilibrium mapped out. You know this is the equal point. You know that if it disrespects equilibrium, we're going to see a move up. If it does respects equilibrium, we're going to see a move down. So right here, you have your 5 minute manipulation. That's what you're waiting on, right? Boom, manipulation creates a fair value gap as well, right? Boom. You have your this right here would be your entry. Why? Why? This is where I entered earlier, basically. I entered earlier this candle right here. This candle made a small little fair value gap right here. So when this candle was coming down and I saw it, it came up, respected, it came down, I entered right here. This was my exact precise entry. Now you're asking why. So we waited for our 5 minute manipulation. Our 5 minute manipulation candle came up. The next candle that came down, not only did it support equilibrium, it's also supporting the overall bias. And then also, I put here in the trade as well. Another first thing you're doing when you open market is you're going to look for what is it? The 3 daily profiles. So if London consolidates and then comes out, no, so London's going to consolidate, right? And then breaks out, you're going to have a New York reversal. So New York's going to come to the downside. If you have a London manipulation, right, or it would be London manipulation and then continuation, you're going to have a New York reversal. If you have a London continuation, if you have a London, I think what is it, manipulation, you're going to have a New York continuation. A New York is going to manipulate and then continue. So if London were to consolidate and come down, you would have New York come up and then come up. I think it will go down a bit and then go back and then go up. So it would do the opposite of this. Now I'll explain. I'll put it into brand new notes so you guys get the 3 daily profiles. There's three daily profiles that we trade on, so we already have a bias for what the market is going to do based off how London moved. Because the two move together. Because when New York opens up, London session is still going on. London session is still going on. London session doesn't stop till around 11 a.m. 11 a.m. Eastern time. So this is just breaking this shit down. Y'all gonna see this full strategy play out anyways. I want to show y'all this. So come back up in our notes right here. What do we have right here? What do we get right here? Boom. We can check this off the list. So we had number one, we had with the 1 hour, right? The 1 hour from all the way up here, right? And guess what? We had a 5 minute confirmation. We had a breaker structure. Not only do we have a breaker structure, it wouldn't even really matter because then what happens? We wait for a 5 minute manipulation or liquidity sweep. What was the liquidity sweep right here? 5 minute was the London lows and the Asia lows. Those were our 5 minute liquidity sweeps. So it was our 5 minute that led into our 5 minute manipulation move as well to the upside. Okay, boom, we have that done. Okay, and this will not be a breaker structure. Can anybody tell me why? Anyone tell me why this with this candle right here isn't a breaker structure? Back up.
Say what you said again.
All right, someone tell me why this isn't a breaker structure to the upside. This blue candle right here.
Because it didn't break the high.
Adrian's right. For it to be a breaker structure to the upside, it would have to take out this high all the way up here.
In a
That's why.
situation like this, when you're looking for, I mean, instead of a breaker structure, you'd be look if the setup was presented, what you'd be looking for is an inverse fair value gap, because the
Exactly.
breaker structure would be all the way on the upside.
Yeah, so the breaker structure for this to continue up and disregard this whole entire trade, it would have to be up here. So you already know we rejected equilibrium. We had the 5 minute. We had our first two steps kick off, right? So what? We have step three now, which I'm going to
And
show
it
you, which
didn't
we're
just
not going
reject
over today.
equilibrium; it also respected that fair value gap that got created at the same
Exactly.
percent.
It also respected this fair value gap. That is even a stronger confluence that hey, we're going to continue down. What do we have right
See,
here?
Zach, what I was telling you before.
So
This
look,
is one of those scenarios where it rejects equilibrium and it respects the fair value gap at the same time.
hmm this right here is a very prob. This is a high probability trade right here because you have multiple things telling you that this market wants to continue down. So right here, yeah. Now the next step, which we're not going to really go over today, but I want to show you on this trade is going to be 3, 4, which is then going to lead to our entry. So you guys can see how it looks like on a live trade that I took today. I took this trade this morning and I put it into chat and everything. 5 minute continuation confluence, equilibrium for value gap, or if 2B happens, which is 2B right here, market open, you're going to have an SMT divergence. Now, you can use any of these because I didn't use the SMT, but SMT would be very probable in this situation as well, which is probably if TJR were to trade today, he would have probably used the SMT. Now, I don't really use SMTs like that, but they're very, very helpful and very, very strong confluences. I just don't use them. I don't really use it too often, but if I don't have anything else, I'll be looking for SMT. So we had a rejection. Boom. Equilibrium. That's what EQ means. 5 minute continuation confluence. It went back to EQ and rejected off of it. That boom. That's number three check for me. Right. I didn't wait on the fair value gap. Yeah, we have a fair value gap right here, but I went off this rejection of EQ. So now we have two confluences. We have EQ and we have a fair value gap supporting this bias to go to the downside. I said, okay, bet. What do? I hop into the 1 minute now. I'm hopping into the 1 minute. What am I looking for now? Once I hop into a 1 minute, I'm looking for the same thing I was looking for in step two. Either a breaking structure, inverse fair value gap, 79% extension, or S&T divergence. When I hopped to 1 minute, what did I see right here? I saw a fair value gap that inversed this fair value gap right here. So I created this one right here, very, very small. I'll zoom in for y'all right here. Very, very small. Now you don't see it no more because it instantly disrespected it. But right here, you have very, very small fair value gap.
Make
Very,
your own
very small.
opinion.
That is a
Huh?
1 minute. That is a 1 minute. Oh, what's it called? So it started down here. So realistically, this fair value gap was like this when this trade opened up. This fair value gap was like this when this trade first opened up. So you would see a red box. Mine is just green right now, but you would see it like this. Basically up here like
Mm.
this, you would see this right here. That's what I entered off of. Once it started came down a little bit, I entered right here. And so once I
Right.
got my 1 minute inverse fair value gap, that's where I entered. Once it created that. And guess what I did? I didn't put it above the first highs. I put it above my second high. That was up here. Because yeah, this is the most recent one. I put it on the one that's higher than that. So I had mine a little bit up here. Just give it some slack to move, right? That is where I found my entry. So now watching this trade play out, honestly, was like hell. So then boom, you see enter. So watching this trade play out today, it was like a living hell because it was going out, it was going down. It was literally consolidating this whole range. Look how high it went up. It went up very close to my stop loss. On my funded account, I had that shit like right here. I had it way more tighter than I had on my live account. But then eventually it came down. It took these lows and it spiraled down. So my original target and what I tell y'all is don't mark these. I took my TP at this 5 hour, at this 5 minute, which was a mistake. I should have trusted the setup to keep going. And what would be our next low on this 1 hour? Our next low would be right here. We have a low right here. We have a low right here. And what the market do? Market chase those lows exactly. So, all right, obviously, I think we hop out of this one. This is probably a 1 hour. You could probably mark that as like a TP1, but realistically, would have gone and taken this shit out right here. Could have targeted these London lows. And what did market do? That right there, boys, is what you're printing. This is the generational wealth right here. Right there,
Really,
boom.
really enough.
Generational wealth right there. You made it out the hood. You freed your family from slavery. You fucking
And nigger,
you're like Helen Keller in your hood basically. You fucking take a trade like that. But obviously,
yes.
what's up?
Mhm.
Yeah, what's up?
After you cross that low, after it crosses that low, you can put your stop and break even and take partials.
So yeah, so once you guys get to live accounts, because some of these prop firms are gay and they don't let you take partials. Top Step does not let you close partials, which is really gay. I think it's that they know a lot of more traders will be making a lot more money if they let you take partials. Partials is so key. I take partials on my live account, and I'm more green on my live account than I've ever been in my whole life. Fucking, I just got off like a what, like a week and a half win streak. Took a L yesterday, made 3 times that today. Why? I took partials, let it run a little bit, and then the last runner, which the last running trade, the last I think .01 that I was gonna let ride all the way down, which would have won me like an extra 20, $30. That trade, I typed in the stop loss wrong, so like it like rejected a little bit and it took me out the trade. Still in profit because my stop loss was I was going to place my stop loss at break even, but I was like, you know what? Let me put it like up here and let me put it like a little bit more in profit. I ended up typing it wrong and it took me out, but it would have kept raining down. It would have been I would have made cheddar cheese. I did make cheddar cheese today. I would have made more cheddar cheese. On the live account, I got out. On the funded account, I got out right here, which is why I have it stopped right here. And this is where I took most partials right here for my live account. But on the funded account where I made the 800 something, I would have done it right here. But I originally had my TP on the funded down here. That would have been 1,500 for today. That would have been $1,500 for today on the funded account. It's just that I didn't. And why is it such a big move to make that much money? Some people make way more money on smaller moves. Cool. I like my risk management. I don't like blowing my accounts. Everybody works too damn hard for their money right now. I'm over here
Yeah,
busting my ass here on
along with
base.
that,
Some of y'all niggas working in
uh,
fast food. Some of y'all niggas go to work. Why are you gonna throw away your fucking money basically gambling on the market? Have proper risk management. Let your trades play out. Trust your trades. So then you have moves like this. And this isn't the only fucking day this happens. You know, it's every fucking day. Generational wealth moves. And look, again, the same thing I did again. I took it at this fucking 5 minute instead of targeting this 1 hour that was down here. And I could have fucking printed generational wealth. That would have been Helen Keller in my hood. It didn't fucking happen. I don't know what the fuck this trade like. I don't know what the fuck is doing over here. This is probably AM trade right here. I don't know, to be honest. I don't know what the fuck this move was, but hey, I fucking made money on it. It just fucks up my whole screen going more back. But you guys see these fucking moves it makes. Exactly, like Eli just said in the chat. You learn from your mistakes, and these are stuff that looking back, you're gonna be like, hey, I noticed that every time my trade goes in my direction, I can make way more money. It's just trusting your trade. The more you backtest, the more I want to say backtest for too long, because then you're gonna start thinking the market moves super fast when it doesn't. That's something that when I first started trading, I wasn't backtesting as much. But I noticed when I first started, I was way more patient. When I started backtesting more and more, I got more confident in my strategy. Yes, my entries got better. Yes, but I also in my mind started thinking that trades would come by faster, so I would get impatient. Y'all see this fucking chop fest right here, right? It doesn't look like a lot of time. This was 5, 10, 15, 20, 25, 30. Damn near 35 minutes of me staring at my screen watching this shit go up and down for 35 minutes. You don't think that's gonna fucking make you tweak out? That shit made me tweak out. I'm over here fucking tweaking. This shit's over here about to hit my stop loss. I'm over here like, holy shit. Is this fucking trade gonna go down? It's fucking damn near perfect entry. Like, what the fuck is happening? But this is where trusting your trade. Once you put in your trade, put in your stop loss at a reasonable place. It has to be a place where your trade is invalidated. Your trade idea is invalidated once it hits that stop loss. It's not a, oh, I'm fine with losing $100. No, it's my stop loss is here because this trade is invalid once it hits here. Now, that doesn't fucking mean put your stop loss all the fucking way up here. Fuck no. You're just fucking risking too much at that point. You put your stop loss. Why? I put it on that 1 minute. Why? Because if it went up above those highs, right? What would it do? Well, we're looking at 5 minute here. Fuck, I had it on the 1 minute right here. So boom, it was back here. Why did I put it above this high right here? Well, because if it came back up and broke this high right here, right? But then came down, cool, still valid trade. But if it broke this high and it broke this high, we have a break of structure now, probably on the 5 minute as well. Now this whole trade idea is invalidated. Now we're going up because what has it done here as well? It's also disrespected equilibrium. So at that point, your trade idea for shorts has gone out the window. And hey, it's going to happen. This isn't the fucking golden strategy to get rich. This is all a probability game. Yes, I've been hitting for damn near almost every single day for 2 weeks. My trades have been hitting. That doesn't mean though that one day I could have the most perfect strategy and it's still not gonna hit. It's just what the market does. I can't control it. But what can I control? Finding good quality setups and finding setups that are going to bring me the highest
Which is
probability.
why risk management is key.
That's why risk management is key.
You
Because
can
if you
you
can
can
go on a
whenever you
losing
get
streak,
confident,
yeah, if you could go on a losing streak for a week and still keep your account, then the next week, in 2 days, you can make back everything that you lost in that whole week. In one day,
and
you can
then
make
you
back
can be
everything you lost.
profitable for a whole week. You can be profitable for a whole week winning, and then you have one bad day, and you fuck up your whole account and you burn it.
Exactly.
That's why it's not just important to have an important profitable strategy. You have to put risk management in place so that then when you do get emotional, whatever the case may be, you have good risk management so you don't get fucked up. If you're able to have good risk management, you have a profitable strategy, and you systemize the whole thing, like statistically, I don't really think that you can just lose all that money. That makes sense.
Yeah, you just can't. You have to have rules in place. Now we will get more into that, once we start getting you guys to understand the strategy and everything. But yeah, we're going to see this on multiple time frames. I'm going to show y'all multiple times where this happens. This day was shitty. This was what yesterday. Yesterday we had 8 red folder news and we had a fucking chop fest. You see, straight chop fest. I don't know how people were saying they made money yesterday. This is fucking horrendous. You don't want to trade this. This is chop right here. This is sideways chop. Market's not really going anywhere. You don't want to trade this shit. This is what you want to avoid. This is what you want to trade. These, you would be fucking Helen Keller. Like you would be the fucking Martin Luther King of your fucking hood. You take a trade like this. Obviously, some fucking bangers like that aren't gonna happen every fucking day. So don't go into the market every day expecting you're going to fucking free your fucking great ancestors from fucking slavery. But look, you can see how it happens. Look, London continuation. Boom. What did we take? Took highs right here. It's also 5 minute highs, but I bet you we hop on the 1 hour and we hop back to yesterday. I bet you those are gonna be highs. Can bet you money those are gonna be highs. Up here, boom, right here. What do we get right here? We got highs right here. What is this high? 1 hour got swept down. All right, 1 hour is right here being swept. Boom, right here. With 1 hour, 1 hour high swept came down. You see, this shit works every fucking day. I mean, if you guys even bother to look at the Discord, even just once a day, when you guys see what everybody's trade that everybody took that day, you're going to see people making money. Like I post, y'all see me. Yeah, I post my P&L. I post when I lose. I post when I win. I post why I won. I post why I lost. There's nothing for me to hide. I'm not gonna help you. I'm not gonna be able to help you guys if I'm sitting here lying on these fucking charts. That's not going to help nobody. It's not gonna help me become a better trader or a better teacher. It's not gonna help y'all start fucking making bankroll. It's just not gonna help anybody. You see your fucking favorite traders. Some of them don't even fucking post P&L. They don't post no fucking number or anything. You go to fucking my screen, look at my screenshots. It has the ID number there of the fucking trade. It shows the fucking live trades. I show my fucking my fucking my trade my fucking Top Step account. I have the full shit there. I got nothing to fucking hide. I low key don't have anything to prove to y'all. Look, here, look. I fucking do this shit every single day. Y'all see me every day. I wake up around 8 o'clock every single morning. I say good morning. I say good morning, team. Let's fucking get this money, and we hop into the charts. Hop into the charts, and you see, we don't fucking nobody in this. We're not hopping on calls or anything as of right now. None of us when we have the free time. I would love to do calls for y'all because then we all fucking eat. But we're all sitting here, we're all discussing this shit. And at the end of the day, everybody sends their trades they took, and you're gonna see everybody's taking like the same fucking trades. Why is that? And you see people with different strategies taking the same trades. So this shit fucking works. You guys see, get your liquidity sweep, boom, it plays out. It's literally you fucking copy paste this shit right here. This is literally this shit in the fucking
And if
making.
and if there's something that actually could help you is that every day that you want to paper trade or whatever the case may be, if you don't know what you were supposed to do for the day or you did something wrong, you might be able to look at one of our trades and we did it right, and you might be able to correct it just off of that.
Well, you said what? No, but repeat that.
That, like, let's say you don't know what they're doing or they did it wrong, and we post our trades and let's say it's correct, right? They can go and look and be like, oh, okay, this is what they did, this is what I did wrong, and they can correct it just off of the trades that we're making if we're doing it correctly.
Exactly, exactly. Just like you said. So yeah, that's the fucking y'all see this shit right here. We could go into fucking a whole different fucking chart. I don't really trade gold no more, but let's see what's popping in fucking gold. Pretty sure we had the Adrian strat here hit a couple days ago. Probably a couple days ago we're gonna see Adrian's fucking shit right here. I don't know where it's at. I don't know if it was here, if it was on ES. Where did we take the Adrian trade at? I don't know, I might have deleted it. Y'all see this shit here every single day. Not with gold so much, but look. Alright, boom, session high gets taken, boom. What do we get? Straight downfall. Boom. Takes this liquidity. Then move up. Boom. Keeps going down. Takes these lows. Kicks up. Gold moves pretty oddly, so I wouldn't really trust gold on this. We go to ES. I don't really trade ES, so my lines haven't been updated. We'll just fucking with the boom. What do we get right here? Same shit happened. New York AM gets taken pre-market right after London ends. What do we get right here? Boom. Straight downfall. Yeah, right here. London highs get taken. Look, boom. Even on ES, this high gets taken. What do we get? Straight downfall. You guys see this shit happening literally every single day. You can see this on any time frame too. Any time frame. Boom, look. 1 hour comes back to get filled. Downfall. Comes back up straight. Fucking waterfall. Boom, right here. Look. We have a high right here. Comes back. Downfall. Comes back up. Takes these highs. Downfall. Boom. Comes takes these highs right here. Downfall. You see this shit happening every single day. You see this shit fucking works. So those are the key things. This gives us context in the market. This gives us our context to go in. We're not just blindly going in now. We have a reason to possibly go in. Now when you see all these other ones play out, it goes in. So let me help you understand. 5-minute confirmation confluence. That's going to be the first thing you look for in the trade. So let's see. Let's go to NQ 5-minute. Right. Boom. What am I looking for when I look into a trade? What does a breaker structure look like? So we're going up, we're going up, we're going up, right? Your breaker structure is going to be from your most recent low or high made. So what would be the breaker structure in this right here? It would be taking out these lows right here. We didn't go under it, so boom, trade went up. Boom, we went under it. This is a breaker structure from this right here. We were trending up, we were trending up, we were trending up, we were trending up. Boom. Now we get a breaker structure to the downside. Now, again, I'll tell you guys this. None of these confluences mean jack shit without context. Without context, without a liquidity sweep, a liquidity grab, a news, none of that. These confluences mean nothing. Breaker structures happen all the fucking time. The only reason they work is when you use them paired with context. So that, look, boom, breaker structure to the downside, taking out all these lows. Equilibrium right here, we have this right here. We have inverse fair value gap is basically a fair value gap, like right here. We probably had, so it's where a fair value gap in the opposite direction gets made where there was previously a fair value gap. So what does this look like? Like right here. Let me find a good one. Hold up. You guys are probably confusing out with this bullshit. What's gonna be what's a good inverse fair value gap? Fuck, I'll probably find it. It's going to be a good inverse. Ooh, found one right here. Perfect. What's a good inverse fair value gap, you're wondering? You have a green fair value gap right here, right? Because boom, you have to see this gap right here, this 3 candle movement right here, right? Boom. Now, you probably got a problem. What the fuck? Right? Probably wonder what the fuck's a fair value gap. This is a fair value gap right here. This is what I mean by fair value gap. So it's a 3 candle movement where there's a giant gap. There's no wick that goes in between. So this wick doesn't come into here, and this wick doesn't meet into here. It creates this box. This box means that in this entire candle movement, whatever time frame it was, whatever time frame this candle movement was in, for those 5 minutes, it was a lot of buying, or there was a lot of selling, and there was no resistance met in the market from that time frame. So obviously, we have a bullish fair value gap right here, right? What is the inverse fair value gap? The inverse fair value gap is from this candle. This candle, from the start of this wick right here, this blue one, all the way down to right here, made a bearish fair value gap. This is a giant 5-minute inverse fair value gap. Now, what happened to this? What happened to this fair value gap? This next candle retested it. So I retested it, but still respected it. Didn't overtake it. This wick didn't cross over this back wick, leaving this gap right here. Respected this fair value gap. And guess what? Came down. Market came down. That is what inverse fair value gap, because it inversed this one right here. That's what an inverse fair value gap looks like. Let me see if I can fucking show y'all real quick. Start new. See. You're gonna see exactly what I mean right now. So we get this candle movement up. Boom. We got 2 of them. See, look. Yeah, bullish one gets retested, gets respected, keeps going up. Goes up, whatever, has its fucking chop fest. And we'll wait for it to come down here. So it created multiple. Now that one, you see how it went away? You see how this wick crossed into this one and it completely took it out the picture? This isn't a fair value gap no more. Boom, you have one right here. You guys disrespect it completely. That's why I mean you can't just go in on them. Boom. That movement right there just took out all those fair value gaps, and guess what? Gonna create a boom. Or it moved so quickly. But it created a giant, y'all saw that giant red box. All inverse fair value gap, a 5-minute inverse fair value gap. And guess what? We also had a sweep of this high right here, which is also a 1-hour high. So you see, paired with context, this shit works. You saw over here that we had all these and it didn't fucking work because it wasn't paired with context until we swept this. So that's what the inverse value gap looks like. 79% extension, you can also use it right here. So obviously, what is a 79% extension? You're going to grab your fib retracement tool, right? You're going to mark it from the most recent low to the most recent high. So it would be this candle right here. We fucking railed that fucking 79% extension. So guess what? Obviously, we were fucking going down. Like, I mean, holy shit, this thing like fucking like this is like this is like when your girl says the big ones hurt. This is exactly what the fucking market just did. The market said the big ones hurt and fucking did that shit. So clearly we were fucking going down. Now, obviously, you don't fucking enter the second this shit gets fucking made, right? Because if you have your stop loss fucking tight as fuck, this fucking wick would have wiped you out. So you would wait for this fucking shit. That's why we have these fucking different steps. That's why we don't just go in on step 1 and 2. So that's what 79% extension looks like. Inverse value gap looks like. Breaker structure, I've already fucking shown y'all. This is also a fucking breaker structure right here. We took out these lows. We're fucking. I mean, we just like gave the market the biggest BBC of its life. So SMT divergence, right? We have this right here. So boom. What would this look like? Oh, okay. The DAC, right? We're looking at the DAC right now. The DAC basically just made a higher high, right? I probably bet money maybe on ES we made a lower high. Let's see if it keeps going. Oh, holy fucking shit. Do we? No, we made a higher high right here. Oh, yes. Oh, yeah, this is probably a news move, I'm not gonna lie. But, point is, S&T divergence is going to look like this. Let me see, I'll just bring up a picture for y'all so y'all don't get confused. Oh my goodness, this looks so sexy right here. So, here's what S&T divergence looks like. So, the DAC, right? Let's say this is the DAC. The DAC creates a higher high, right? While the ES creates a lower high. This is S&T divergence right here. If the DAC creates a higher high and ES creates a higher high, we don't have an S&T divergence. Now guess what? Here, we didn't have an S&T divergence, but guess what? That's not the only fucking thing you need for the trade to go down, huh? We're not just waiting on that to fucking happen. Guess what else happened? We had a break of structure happen. We had 79% extension. You can remember this as your girl says the big ones hurt. Yeah, the big ones don't hurt my fucking wallet. Fucking this shit right here. We had that. We also had a giant inverse for value. So we had basically all of these three pop up. But we didn't have this one pop up. Sometimes you could go in on just this one popping up. You don't fucking need all these three. You just need one of them. You just need one of them to move on to your next step. So right here as well. We sweep a low, right? And let's say the DAC, right? Creates a lower low. And then ES creates a higher low. Got a fucking SMT divergence. Guess which one's leading? ES. ES is the leading one. ES is going to be the leading index. That is the one you're going to take the trade on. If ES creates the higher high and the DAC creates the lower high, the DAC is the leading index. You're going to want to take your trade on the leading index when it comes to SMT divergence. Now, this one's a bit tricky to use, but once you fucking master this shit, you're going to be printing so much money. You're going to be like, oh my god, what happened to Virgil? That's exactly what the fuck's going to happen when you figure that shit out. So, fucking, what else do I got to go over? Right here, boom. We already explained this whole 5 minute, this 2B step. No one, this shit happens before market open. Boom. So that's just basically probably gonna be it for today's class. I already went over these two steps, right? Next class we'll be going over 3, 4. We'll basically finish it up for next class. We'll go over 3 and 4, how to spot these after we get these two, which will be class 4. Basically doing these two, and then class 5 will be going over the entire strat, putting how to put this together, and taking we're all going to be back testing. I'll bring it the back tester, and we'll all be taking these trades, and you'll see exactly how I look for these things while backtesting. Like, hey, look, we just hit the high. What are we looking for? Oh, boom, we up into 1 minute. Backtesting can be a little tricky because it's a little weird, but you know, it's better to have that than to go every day into the market and lose your fucking money. So yeah, fuck. If y'all got any questions, I mean, speak out, speak up now. You know, before I get fucking freaky. Let me get out of here. Anybody got any questions? Anybody confused? Y'all didn't get lost on my explanations and shit?
Well, I'm about to, because they're gonna post this on YouTube, right?
Yeah, yeah. I'm posting this video on YouTube.
Yeah. All right, bet. Because I'm all for sure whenever I get this, we look into it. I'm like brand new to this shit.
But that's smooth. I'll do a recap. I'll do a giant video where I quickly run through every single thing. Later on, once I finish the classes, I'll post like a video of me doing all of this, like basically from step one, explaining what trading is, and then everything else as well. But that'll be like a speed video, but you'll be caught up by then. But yeah, y'all see here, could have printed fucking money on Martin Luther King today. Would have been we I ain't gonna lie, would have been feeding the streets with this trade down here. I'm not gonna lie, would have dead ass like, oh my god, what happened to Virgil type shit. But yeah, fucking that's it for fucking today's class. Fucking we went on for an hour. Um, again, speaking to the video now. If you have any questions, y'all can join the Discord. I'll drop the link in the bio. Like, subscribe, help out. Follow the TikTok, follow the Instagram. It's gonna be the same thing as the YouTube name. It's not hard to find it. Well, yeah, if anything, we'll catch y'all later.